Hey guys, and welcome back to the Accumulation Zone YouTube channel. Right now we're going to be doing the weekly outlook. We're mainly going to be focusing on Nasdaq and the S&P 500. We're also going to take a quick look at gold because I've already done all the markups for it. Right away we get started looking at the Nasdaq 100 E-mini futures contract on the weekly time frame. Looking at the weekly, I like to keep things as simple as I could possibly make it. Remember where we're coming from here of this low, where we've seen the low of this, let's call it a bear market, during October 22. We continued to the upside, old resistance being turned into support, a little bull flag pattern, and eventually we pushed above the all-time high that we've seen during the end of 2021 here, November 2021. After we pushed above it at the beginning of the year, so this is January 2024 right here, this line coming off this candle is the yearly VWAP, and we can clearly see that, well, we've been in an uptrend. All we've done so far this year is put in place higher highs and higher lows. Higher high, higher low, higher high, lower low. Yep, this is what we call a manipulation move. Manipulation, and we would have been able to tell very early on that this has been a manipulation, because once we've actually cleared a weekly low and another weekly low bouncing off this down closing candle within essentially only up closing candles, this entire move right here where we moved a total of, let's measure it out real quick, 27% to the upside above the old all-time high. This down closing candle here on a weekly chart stands out. And what do we often say? Within an uptrend, we're looking for down closing candles to act as support. Within a sea of green, we're looking for, in this example, black candles to hold support. And that's exactly what we have been doing. We held support and we immediately pushed back above, let me zoom in here real quick, above this bearish fair value gap right there. And we've seen that we got the close in, that we even gapped almost above that bearish fair value gap. So instead of continuing lower, we immediately pushed through it, having retested this monthly all-time high close here as well. If I go to the monthly time frame, this gets a little bit more obvious. If we look for down closing candles on a monthly, or simply the highest monthly close from the old all-time high, could have expected some sort of support on old resistance. This is usually how markets move. And we had a nice monthly bullish fair value gap sitting here as well. So if we point all of that out, looking at the weekly, we've seen the monthly bullish fair value gap. We close above it, we come back to retest it, and that's really where we kept on going. Of course, the final confirmation would have been received once we actually close above the only bearish fair value gap within this entire move to the downside. So we have 1, 2, 3 weekly bullish fair value gaps. We never actually retested the inversion fair value gap right here, but that doesn't matter. Once we pushed above the high, once again, we are testing down closing candles. We hold support right here very beautifully on a weekly time frame. We test it, we hold support, and we continue to go higher from here. Essentially moving up another, I think 20.78% to the upside within almost no time, pushing higher. And that's my most recent PD array. That's why I have it outlined, measuring it from the low all the way to the high. I marked out the consequent encouragement, and we can see that the current or last week's candle actually closed right on that consequent encouragement. You can see that right here. Close right around that area. So what's interesting for the week ahead? Well, in my opinion, once again, quickly going back to the monthly time frame, I'm interested in, once again, looking for support on down closing candles within an uptrend. And for me, This would be right here, the monthly candle of April 2024, coming in at around 18,763, just around that area. And if we bring that down to the weekly, that's essentially what we're looking for. Calling it the monthly order block, starting right here. This is our monthly all-time high close. And this is our overall range. And another interesting thing is, right here, we also have a weekly bullish fair value gap that has been used to support price once here in May and June of 2024. Now we're coming back into it in July 2024, end of July 2024. We're still holding at that 50% level, but what I really like is the yearly VWAP. We haven't tested the yearly VWAP in a long time. And if you watch my daily live streams on the Discord server, you know what we use the VWAP for. It's a key institutional level. And yeah, you just want to keep track of yearly, monthly, quarterly VWAPs and stuff like that, because institutions do. And we're playing against institutions. We're still small fish, no matter if you use ICT concepts or not. Doesn't make a difference. So I'm looking at that yearly VWAP overlapping nicely with that monthly order block, and well, the weekly bullish fair value gap here. Looking at the monthly time frame, we don't have a bullish fair value gap here anymore. We have a unfilled one down there. We already tapped into this one. We haven't tapped this one. We've already tapped this one right here, but well, let's make it simple. If we continue with the uptrend, which we have been, most likely what we're going to see is a bounce of the yearly VWAP, maybe go a little bit below it, bounce from the monthly order block, and continue to go higher. If we stay within a simple uptrend, that's what's most likely going to happen. We could see something like this play out. Let me quickly go back here and try to remove those two brushes. Perfect. We could see something similar to what we've seen here. If we look at the bars pattern, let's measure it from this high, where we slowly trend lower. I mean, here we also retraced a total of 12.5%. But I don't think that is going to be the case, because we've already retraced 10%. 10% already, so that is theoretically still a little bit of room to the downside. That's why I'm specifically looking at this monthly order block, the yearly VWAP, weekly bullish fair value gaps that we have sitting right here. But I think it's too early, in my opinion at least, to call it the all-time high and call in the bear market, looking for, well, more sell-side liquidity than this. That's the max I would really look for, a target to the downside, because it's not confirmed yet. If you would have tried looking for that market structure shift here, well, guess what? You would have been screwed. Same thing right here. Oh, well, market structure shift is in. Bearish fair value gap entry. Oh, okay, it's going really well. It's going really well, and you're screwed. That's the thing if you're being a bear in a bull market. 3, 4, 5 times you're wrong just to get it right that single time, missing out on all these gains during a bull market. And to me, that's really not worth it. But that's not the topic of this video. For right now, just by looking at the weekly time frame, this would be my target. We could see something like this heading into next week, a short-term bounce into the weekly inversion fair value gap, and then use it to continue lower. This would be ideal. We have some high impact news events coming in next week as well. If we quickly look at Forex Factory and open up this week, apply settings. It's also the end of the month, the beginning of a new month with the beginning of a new month. Every first Friday in a new month, we have the NFP news event. So we also have this next week or the week coming up at 8:30, the unemployment rate and the non-farm employment change. We have PMI news at 10 on Thursday, and at 8:30 we have unemployment claims. And on Wednesday, the last day of the monthly candle, we have the FOMC statement and the press conference. So all eyes are on Wednesday. The decision is being made if the Fed is going to cut interest rates or keep them the same. We will see what happens. Investors worldwide, especially US investors, are waiting for, well, the release of the federal funds rate, essentially. So, doesn't matter. Let's look at the charts and see if we can come up with anything. Well, let's say if they cut rates and everything remains bullish, then we've already retraced, priced in the rate cut to continue to go up higher, which would be nice. We will see. But now let's switch to the daily time frame. You can see I have that same range, the same yearly VWAP. But on the daily, we have a few other interesting things, which make me believe that right here, most likely the thing that we are going to see is either we immediately going to test the monthly order block, yearly VWAP, and all the stuff we just talked about, and then bounce from here, or we retest the inversion fair value gap first and continue lower. We also have a weekly bearish fair value gap sitting here with a inversion, but I don't think we're gonna go up this high just to get down into here. Don't really think that's necessary, and I will explain why if we go to the daily time frame. So on a daily time frame, we can see we close below consequent encouragement. We have the yearly VWAP sitting right here at around 18,720. Let's round it up, keep it simple. We have a daily bearish fair value gap right above us, overlapping nicely with last week's new week opening gap. And which is what's also very interesting is this unfilled new day opening gap, daily volume imbalance, new day opening gap. We've seen it last week during the overnight switch or the rollover from Tuesday over to Wednesday. And we can see that, well, essentially Wednesday opened up and it actually from the opening price didn't even go a single tick above the opening price. So we opened up and all we really did was continue lower, targeting the consequent encouragement. We've pointed that out as well on our daily Discord live stream. So if you, well, are not on our Discord yet, make sure you get on it. But anyway, that's why I think most likely what we're going to see is a retracement into that. Question is when and how that's going to play out, but most likely, like I said, the lowest sell side liquidity I would be aiming for would be this low and this low right here. Yearly VWAP bounce. I would personally prefer the continuation lower first and then a sharp reversal out of it. But we will see what happens. This weekly outlook, higher time frame video that I'm doing right now, I'm doing it mainly for myself to get a few ideas going, to, well, get a feeling for the next week essentially. In terms of order flow, we would simply anticipate price to continue lower of the daily bearish. The question is where inside the daily bearish fair value gap, and that's when it's helpful to look at the 4-hour time frame. On the 4-hour time frame, you can already see a completely different layout. I usually do it inside the object tree. So right here, first of all, we see the SMT divergence at the all-time high, our 4-hour market structure shift paired with the breaker block. We've outlined orders multiple times in our live streams. And measuring the final manipulation here on the 4-hour time frame, we look for 3.5 to 4 standard deviations, because that's usually where we, well, happen to see some sort of a short-term retracement, or maybe even a full-on reversal. I'm not going to go to explain for the next 5 minutes why and how. This is a basic ICT concepts. Doesn't even has to be called ICT concepts. Just something that has proven to work at least for me. Anyway, so looking at, well, price right now, we reached for standard deviations. We've hunted clearly plenty of sell side liquidity. More sell side liquidity would be right here, overlapping with the yearly VWAP, the 61.8 Fibonacci retracement level of this entire range. We looked at it on daily. You can also point it up right here. Let's put it on 61.8. Sitting right here where that VWAP is essentially. So if we go back to the 4-hour time frame, well, I'm starting to see some sort of a low formation. And I think most likely what we're going to get is just looking at last week's range right here, measured from the high to the low, the retest of the 50% level. And, well, if you think that the yearly VWAP, the monthly order block, and all those things are the target, the most likeliest target, well, where would you want to short it? In a discount of last week's range or in a premium? Remember, you want to short in a premium and buy it back at a discount. That's how we make money. And that's why I like to draw up last week's range. We have the previous week consequent encouragement sitting right here. The thing is, we're most likely not going to see this level being touched, and then we keep on dropping. I think, especially with the FOMC news event coming in on Wednesday, we're most likely going to see a midweek reversal, if you ask me. So we could see Monday, Tuesday trending higher, maybe into the new week opening gap from last week, maybe even into the new day opening gap. But we will see how likely that is. But yeah, I would be looking for short setups above that 50% level ideally. Even though it's difficult, knowing that we have a unfilled volume imbalance sitting above. And if we see Monday, Tuesday trending lower, I'd be looking for longs below the previous week's low, maybe even below sell side liquidity right here from Friday the 31st of May, essentially, right here. So this would be another good sell side target. Let me actually draw this in 1 second. Let me use this line, then it's already stored in the correct folder. Sell side liquidity, bottom. So we're in an interesting position, say at least. We have the yearly VWAP right around this area, the monthly bullish order block, a weekly bullish fair value gap, a daily bullish fair value gap, and all that stuff. So yeah, personally I'm more interested in seeing continued shorts, but we will see. That's the thing with weekly outlooks. We can only use them to, well, essentially prepare our charts, get a feeling for where we're currently trading at, and then react essentially based on those ideas we've already formulated right now, and then, well, take it from the lower time frame. I'd be looking at my daily, weekly, keep track of that throughout the entire week, and then mainly look for setups on the hourly and try to execute it on the 5 or 15 minute time frame. And if we look at the hourly time frame specifically, I know this video is starting to get a little bit long, but what's the matter? If you're watching till here, you're most likely going to keep on watching until the end. Right now I'm going to show you an example of why I'm a big fan of using standard deviations of the final manipulation. So right here, we're at the all-time high currently. We formed our higher high, higher low, after the most recent higher high, obviously, and then we formed a new higher high. Then we broke our most recent higher low, making this range our final 1 hour time frame manipulation. And I'm always looking for 3.5 to 4 standard deviations. And whoa, what happened here? We turn around, retesting our 4-hour breaker block. We've already looked at this on the 4-hour time frame right here. Let me go over to the right. This is our 4-hour breaker block. If we break that down to the hourly, you get, essentially the same thing, right? Here's our breaker block. After this massive drop on Thursday, the 11th of July, We consolidated, we retraced into the breaker, consolidated even longer, but once again, we form our high, higher low. And well, in this scenario, it's a little bit more difficult. We could look at this final pump above this old high, where we also had the SMT divergence with the S as our final manipulation move, or we could look at this entire range. Thing is, if we use that final pump, 4 standard deviations, well, essentially gets us to the short-term low. Last week's opening right here, this is the entire Monday last week where we opened up. Let's see what happens if we use the entire manipulation range from the low to the high. Well, I like the other one more, to be honest. This really goes down to me as the final manipulation because we pumped up, cleared buy side liquidity, and turned around real quick, and then filled in inversion fair value gaps and continued lower from there. So I'm going to keep it at that. Reached for standard deviations, turned around, retraced, left some more SMT divergence behind. If you watch the streams, you know that we have been eyeing this perfect equal high buy side liquidity last week. Unfortunately, that didn't happen on NQ and only on ES. And from here, we really dropped lower. But once again, we're looking at that final manipulation. We form our high, higher low, higher high, and another higher high. So now we're looking for the highest low within this range. And the highest low would be sitting right here. So I count this as my final manipulation move on the hourly time frame. And once again, if I draw my standard deviation Fibonacci range, I can quickly show you the settings for that. I can simply pause the video and take a screenshot. Those are my settings. If we look for 4 standard deviations to the downside, look where we're at. Currently at the low. Of course, don't be too, well, perfectionistic with the 3.5 to 4 standard deviation target. We can go below. We don't always have to reach it. It's just for a rough measurement to have a, well, realistic idea of, okay, I'm getting short here. What could be my best case scenario target? Well, now you have an answer based on standard deviations of your final manipulation. So yeah, just based on that on the hourly time frame, what am I really looking for Monday morning when we get started? During the London session on our Discord server during the live stream. Well, I've marked out the most recent hourly fair value gaps. Right here, we've been holding resistance here 1-2 times already. And ever since we opened up on Thursday, we've been holding up support on hourly bullish fair value gaps. So I want to see how we take it from here. Are we going to see a left shoulder head, right shoulder setup to take it lower into the previous week's low? Are we going to keep on holding support here and push it higher, ideally close above this hourly bearish fair value gap, and then make our way into a premium of last week's PD array? That's really the question for me, but once again, I can't look into the future. I can only react and prepare myself for all possible outcomes. And yeah, I think that should pretty much be it. We talked about NASDAQ for 23 minutes. I didn't plan on doing that. But before we end this video, let's take a last look at gold, because I know you guys are interested in gold as well. Right now, once again, if we look at the weekly time frame, I'm looking at my final manipulation moves to look for potential targets to the upside. We've seen this manipulation right here at the low. 4 standard deviations delivered us nicely into the 2011 all-time highs here on gold. We achieved that goal, and right here, really where this entire move to the upside started from, we took sell-side liquidity. We immediately shifted market structure from right here. This would have been your perfect entry to catch the entire run into the all-time high. Lower low, lower high, lower low, higher high, higher low, higher high. Well, that says it all, really. And yeah, looking for 4 standard deviations here would roughly get us above or into the $2,600 level here on gold. But right now what we're currently seeing is Seek and destroy type of price behavior or delivery. We take out highs. From the high, go lower to take out the lows. From the low, we go back up to take out the highs. Question is, are we continuing this pattern? If we were to continue this pattern, well, this would be next. We go from highs to lows, from lows to highs, from highs to lows, from lows to highs, and from highs once again back to the lows. If, well, it repeats what it has been doing the last couple of weeks essentially. But if we were to hold here on this weekly bullish fair value gap, and we've already seen a very nice reaction out of the weekly bullish, we're most likely going to see a new all-time high and continue our way into the 3.5 to 4 standard deviation target of mine. But we will see what happens. So that's the weekly time frame. If we look at the daily, you can also see that we cleared some nice sell side liquidity here. Tap this daily bullish fair value gap, which is also a weekly bullish fair value gap right here. Retesting the 2011 all-time high. Question is right now, because what we've been seeing most recently, once we cleared the high, let me get rid of this button right here. We take out the high. We stop respecting or holding support on bullish fair value gaps. We close below them actually, leaving behind new bearish fair value gaps. And well, then we use those bearish fair value gaps to deliver lower. So in my opinion right now, we're in bearish order flow. Because that's what, well, happened over the last couple of days here since we cleared the all-time high. Looking at the weekly time frame, well, it's difficult to say. We have huge wicks to both the up and down side. We just held support on the weekly bullish, but this could just be an initial reaction on our way to equal low sell side liquidity right here. In my opinion, this is the most likeliest target. And since we've been respecting bearish fair value gaps to deliver lower, most likely after taking out these lows right here, I would be looking for short setups inside the most recent daily bearish fair value gap, overlapping with the inversion fair value gap right here. Maybe look for a retest of this up closing candle within a downtrend. We would look for resistance in up closing candles, obviously, for the continuation lower. And once we close below this daily bearish, this is really your final confirmation before we hit, yeah, the equal low sell side liquidity. So that's my weekly outlook for gold. I'm not going to break it down below the daily time frame. I just know what's happening on the daily, and if I see some nice setup on the hourly time frame, I would most likely also consider taking that. Alright, the video is already 28 minutes long. If you do have any questions, make sure to join us on Discord. All the links for that are in the video description box below. If not, feel free to also simply post your question in the comment section below. I appreciate you watching this video. Make sure if you liked it to leave a like and subscribe to my YouTube channel. Otherwise, we will see each other eventually on our Discord server. So take care and enjoy the rest of your day. Bye.